Running, owning, operating a business is filled with risk. Every single day, there's pressure coming at you from operations, financial, legal, compliance, cybersecurity, you name it. So how do you know when is the right time to sell your business? And if you wait too long, are you risking not being able to sell your business at all? Well, on today's show, I'm joined by my guest, Jay Turo, the Managing Partner and CEO of Growthink Capital, GT Investment Management, and Growthink Consulting. Jay, welcome to the show.
Tim, great to see you. Great to be with you today.
Well, I'm excited to talk about business risks. As a business owner, every single day is walking on landmines. So what I figured we would do here is share with our audience some of the risks that we see on a daily basis and putting it under the theme of why now is the perfect time to sell your business. So let's talk through some of these themes and these risks. But right off the bat, what is your take on risk and business risk? And what should business owners really consider when it comes to the broad topic of risks in their business?
The big idea, this moment in time in history in which we live, Tim, all of the ways modern business is done, modern life runs, makes cataclysmic risk, systemic risk. You're going to be wiped out tomorrow kind of risk, more at the forefront than ever before. Now, it is the other side of the exponential ability for businesses to the speed at which businesses can grow and change. The other side of that is things can turn for the worse very, very quickly in a modern business and life environment.
We hear it a lot where business owners say, I'm thinking about selling, but maybe 5 years from now, maybe 10 years now. We talk to business owners all the time about the conversation of getting out. And they say, yeah, maybe in 10 years, call me. We're just going to hunker down. And this podcast in particular is us saying, don't hunker down because these things could actually potentially take place in your organization. And yes, we're believers in capitalism and growing your business and all that kind of stuff. But we want to have a sobering conversation about risks. So I figured I would throw a few of these risks out there to you and we could just kind of riff on it. Risk number one is old age, just getting old and not being as sharp as you once were, thinking that you have what it took when you were 30, that still applies when you're 60. What's your take on that?
You reach a point in your business career, in your entrepreneurial career, in your business owner career, where you are managing a balance sheet more than you are managing a P&L. You and I encounter many business owners who generally are conservative, conscientious, frugal type folks. And so if they've had success in business, when they get into their 50s, their 60s, certainly their 70s, they have significant financial assets. They have cash, they have stock, they have bonds, they have real estate. They have a business that has significant equity value. So the balancing of those risks as you get older, naturally, it's about preserving what you got versus getting more.
Yeah.
That's just a lot of people take that like as a value judgment. It's nothing to do it's like, okay, I'm just checking out. It's got nothing to do with that. It's a straight financial analysis that as you get older, that becomes far more financially valuable. And it should be to the degree that as you've gotten older, you've gotten more assets to work to protect those assets versus continuing to take risk to accumulate more assets. And that's where that comes in. Now, the whole health and wellness thing, we'll leave that for another day. I mean, we're all going to die, Tim.
That's
all right? That's going to happen. Sorry to tell you that. And, one of the people that we deal with, they're cognitive dissonance. They're going to be the ones that don't. I'm telling them right now, that ain't going to happen.
So there's a cousin to this. There's a second part to this. The second part to this question is the owner, in many cases, we see this a lot. Their C-suite, their managers are also aging out as well. It's not uncommon to see, 65-year-old CEO who also has in the 60s their C-suite who are also considering retiring. And those guys have a lot of intellectual capital amongst them. They know a lot.
Oof.
Business, and they haven't fully transferred the how-to down, and that could be a long, lengthy process to do that. And not every business is successful in the succession process. So, what are your thoughts, not only just on the aging out of the owner, but maybe the aging out of the management team and underneath them?
It's such an important point that organizations that as the owners have been at it 20, 30 years and more. Yes, they're key people to the degree they're running good, they're running quality enterprises. Their key executives have also been getting older. And that just points to that it's almost a network of effect of there's a natural transition that the business needs to take to be to the next generation. It's again, let's put aside the whatever, like, pass the baton. Let's put that whole discussion to the side. Okay. And just again, from a standpoint of there comes a point at which a younger team is going to be able to be more effective in managing the business. Like one thing, at some point it has to happen. Okay. Now, a lot of 60, 70-year-olds, they may be in denial on that, but for sure in their 80s and 90s, it becomes very clear that you got to transition. So not forget about like again, like, all right, I'm gonna check out here and I'm gonna go out to pasture. It's more financially that younger team can get more value out of the business. And so thoughtful buyers recognize that and they will pay you a premium because they believe they can make the future of the business be worth more that you and all your, wonderful, but, long in the tooth team is going to be able to do.
Yeah, yeah. And then that starts to transition into a two-parter of technological risks. So part A would be internal technological risks, like your standard operating procedures, your software, your tech, modernizing. And then part B of that would be your external, just the technological pressure of every other business that's out there and the competitiveness of adopting things like ChatGPT and all these other tools. So what are you seeing right now with business owners that think they can do it and they think that they have what it takes to push it forward, but really they don't?
It's a fantastic point, Tim. It's a fantastic point. So you and I work with many business executives that, again, let's say they're in their 50s, 60s, and 70s. They're very, very smart. They're aware of the need to technologically transform their companies. They're aware of it. Okay. They're not Luddites. They're not sitting here. They put the fax machines are now, they've been sunsetted. Okay. They're not faxing. They're good. Okay. And they get it. And, we've had many conversations about they're saying, hey, we got to adapt AI. We've got to move to different types of cloud systems. We got to change the way our salespeople, that they're more of a CRM type guy. We get it. There are exceptions, so they're few and far between. For the most part, after a certain point in your career, your ability to do that fluently with agility, it goes down. It just goes down. And again, that's impacting the value of the business because someone else coming in that's younger and is coming at it fresh is a lot of the legacy technological systems and weaknesses of a company. It's like they're going to be able to handle it better. And again, they're going to see that and they're going to give you a premium versus you holding on and kind of trying to manage the technology and the reality. The best you probably could hope for is just to not fall behind too rapidly. You're not going to get ahead.
Right. Well, what about cybersecurity? Because that plays in as well with technology. And cybersecurity is part of, just the larger, broader risk. There's financial risk tied into it. There's governance risk tied into it.
Okay, this is more of a theme for all of us as just people, and the cybersecurity risk we're all subject to every day. I mean, we all have stories. We've all been hacked. Okay, that's just how it is. Yesterday, folks impacted by the hurricane in the southeast, they couldn't log into their Bank of America site. The Bank of America websites were down. They couldn't log in. So I always use this story. How much money do you have in your pocket right now, Tim?
Right now, zero.
Zero. Thank you. So
$0 in my pocket.
you cannot access electronic payment systems. You ain't eating tonight.
It's true.
Okay. So cybersecurity risk, it impacts us as well. If you have a lot of assets, you are way more at risk. A cybersecurity, whether it be shutting your business down, breaking into your bank accounts, whatever all the different aspects of it. If you have more, you're more at risk.
Right.
So that's a risk that all of us are facing. But those that are older and have a lot of assets, that's where, hey, another reason to sell and diversify those assets. Think about what can you do to move those assets in places that have some insurance against cybersecurity risk. That makes more sense for you. The older you get and the more assets you have.
And this goes along the theme of, compliance and legal risks, lawsuits. The longer you're in business and the more money, more money, more problems, it's just coming for you. It's hard to deny. Even if you have all the insurance and you're good on that regard, it still takes a lot of emotional strain to go through every one of these, bogus issues that comes up all the time. So there's
I
that
mean,
as well.
it's just, yeah. Again, like, is it worth it? There's like, okay, is it really worth it? The litigation risk, labor litigation, liability, product liability, customer lawsuits. Is it worth it? The threats of it, the internet flaming. At what point is it worth it?
Yeah.
Does it become worth it? Are those fights worth it? Again, by resetting the balance sheet of the business, that the sale of the business can actually make the business less of a target. Like, it's not a question now, in this age that we're in, of most of the folks we work with, they've been through many of these cycles where they've been involved and they've been sued. And I've never had anyone say, Tim, and I know you have, when anybody says that is nothing but like one of the most unpleasant experiences you can have in business.
Yes.
It's unpleasant on so many different levels. Or businesses have been flamed online.
Mhm.
Okay, incredibly unpleasant. So at some point you're like, you start running the math on it? It doesn't make sense. Doesn't
Mhm.
make sense. I'm just gonna make one comment. It doesn't mean that you're never gonna do anything again, but there's many ways to stay involved as a serious business person, as a serious entrepreneur, where you can be in the game without having, whatever it is, 50, 60, 70, 80, 90% of your balance sheet in one company that is just a target of all these types.
Right, right. And being a target, let's talk about geopolitical risks. It is very tense out there. And we talked a little bit about this a few months ago on another podcast, but it's almost like things have become even more tense since we spoke, coming up on election year and all that. So how does that play into the overall risk of a business and thinking about the next 10 years, or should they sell now?
I'm an end of world guy. Okay. That I'm not living on I'm not growing my own food on a farm in Idaho, with all due respect to people that grow their own food on farms in Idaho. I don't do that. I live in LA. You live in Nashville. We live in major economic and cultural and social centers. We love life. Okay. So I'm going to start out by saying that. At the same time, that the likelihood of a major geopolitical event resulting in a sovereign risk event, such as a situation where dramatic drop in the value of the dollar, dramatic drop in the stock market, unavailability of credit. So an event like happened in the recession of 2009, 2010, it's inevitable. It's inevitable. It's an interconnected world, and one that is laden with massive debt amongst all of the major economies, that this event's going to happen. Now, we'll get through it. We're going to get through it. As you know, it's not like human beings are resilient. Entrepreneurs will figure out a way to get through it. But that's going to, again, be an event that's going to lead to a significant drop in everybody's balance sheets.
Mhm.
And so that is where, to the degree you have concentration in an asset that is, whatever, a very significant percentage of your net worth, that's just bad financial planning in the face of what is, without these geopolitical risks. The difference between today and, let's say, World War II is that because of technology, these wars aren't going to be, it's not going to be soldiers being sent like my uncles were
Right.
to the front in the Pacific Theater. It ain't going to be that. It's going to be cyber. It's going to be attacking the system. The internet's going to go down. It's going to be attacks on the banking system, things like that. And so again, that's where a business owner has to say, the risk reward, it ain't what it used to be.
Right. So how does a business owner start to think about when is the time right? Right. I mean, we're listing the doom and gloom here because I think we could talk about how to grow your business and how to make it secure, but that's not this. We're talking about these are real threats. You seriously need to consider them. I mean, you cannot go through the world with a blindfold on. And if you think your business has some value in it, and you think the timing is right, now is really a good time. I mean, what else would you add to that?
What we see is business owners are their natural admirable conservatism. Their default is very much to leave things as they are. Our argument would be from a just a straight Moneyball financial metrics, expected value standpoint, that is extraordinarily dangerous cognitive dissonance. It has your head in the sand. I use a simple number here. If you have an opportunity to sell your business for multiple revenues or a reasonable multiple of sales, which I would put above 3 or 4 times of profitability of EBITDA. Okay. So a reasonable multiple of revenues, or more to the point, a reasonable multiple of EBITDA. Not 10, 20, 50, we're not talking NVIDIA here. A reasonable multiple. It is a business malpractice, financial malpractice to not explore selling the business.
Yeah.
That's just how it is. Now, I'm fine with you saying, coming back and saying, Tim, to the business owner, say, hey, I get it. I'm okay losing money. I'm fine with it. I'm fine if you, but at least be honest about that conversation. Don't delude yourself. That's the messaging that is more to the point today, because it just becomes a tipping point, right? Like, it'd be okay if there was just AI technological risk. It would be okay if there was just cybersecurity risk. It would be okay if there was just geopolitical risk. It would be okay if there was just, you know, US debt bomb risk. It'd be okay if there was just competitors from all over the world risk. It'd be okay if it was just the litigation risk from employees and customers. Put them all together, the risk reward calculus is just it's so obvious. At least explore it. At least explore it.
Business is about managing risk. Entrepreneurship is about risks, taking smart risks, and exit planning is not without risk. Selling your business is not without risk. So even though we're talking about, now is the right time to sell your business, we still need to talk about selling your business risks, exit risk. So there are earnout risks. Let's talk a little bit.
Yeah.
What's your take on earnout risks?
This is, by the way, why you need quality advisors to help you through this process. Okay. So, I've been very blessed to work with some of the most talented and successful investment bankers in the marketplace. And earnouts, above all else, is an area where a talented advisor, a talented investment banker can both structure those earnouts, or even better, negotiate through those earnouts that they're not there. So they're either you're getting paid at closing, or it's debt. It's not contingent upon a business event. And so there's a lot of delta, Tim, in terms of what those earn, and even all over the place. There's no 10 commandments of earnouts. Okay. It's a negotiation. And if you're working, if you try to do this on your own, or you worked with a person without experience, that's an area where significant risk in terms of selling the business and come in. But I would argue that with a solid advisor, by the way, most importantly, getting multiple people to multiple offers, creating an auction environment where you're not just relying on one, that those earnouts can be ideally not there. So you just get paid at closing, or if they are there, they're not contingent upon a business event.
And then that leads into post sale, right? Because we're talking about earnout, but there's also integration, the transition. Things often fall apart in the transition. So there's risks there. There's also risk with successors, right? Not every successor is perfect. Not every successor works out, especially when we start talking about passing your business down to the kids. There's even lower success rates, and the second generation, third generation, fourth generation starts to decrease as well. So there are risks on the way out the door. I love what you said, that there's having an inexperienced team is probably the biggest risk of all. So with that being said, the big takeaway here is having an experienced team like a Growthink. If you're looking to start your business, call us today, www.growthink.com. But you got to make sure you have an experienced team to help you navigate all of this. Whether or not you're looking to sell your business, you need a team, advisors, to help you just manage and navigate risks in general. I want to kind of bring this to a close with any experiences. Have you had any experiences or any examples of businesses that you can share where you said, what, that person should have got out and they didn't, and it didn't work out so great for them?
There are businesses that we've known for quite some time that we have advised to explore a strategic and financial sale of the business, that the owners of those businesses the factors that made them successful, their fierce individualism, their pride, their stubbornness, their belief in themselves, their self-definition, and their identity tied into them and the business are one and the same.
Hmm.
All those factors led to that phrase again, Tim, cognitive dissonance, where very bad financial decisions are made and that the business goes, and again, it's a very small tipping point, right? Like a business that like if a business has just slight increase in profitability, it's quite valuable. If a business is very profitable, but the profitability is coming down because of this slow bleed, worth nothing. And it turns quick. It's like I think Mark Twain said it. How do you go bankrupt? Very slowly, then all at once. And that's
Right.
the same thing with that's the same thing with businesses. When do they become unsellable? Very slowly and then all at once.
Yeah.
And we see this all the time where you got a 70-year-old owner talking to a 70-year-old owner, the business has made a lot of money. They had $10 million in EBITDA 10 years ago, and that's very exciting. They talk about it, but they're losing money today. Business worth nada.
Yeah.
And they've left tens of millions of dollars on the table. So I always say, like do whatever you want to do. That's the beauty of being an entrepreneur. Do whatever you want to do. Just be aware of the money at stake here. And then also just say, step back, step back a little bit. And with that money, what business opportunities, what life opportunities would be opened up with that?
Mhm.
That there's a 10, you know, old Cat Stevens song, there's a million things to do, there's a million things to be. You can, and you see this with so many, some of our heroes, Tim, are folks that sell their business, become venture capitalists, become mentors to other businesses. And that's a natural transition for an older, successful entrepreneur. Go from being the operator to being a board member on a lot of businesses, being an investor. You still get the juice of being in the game, but it's just such a financially better decision. And by the way, if you do it right, and you see this, you see some guys that have made like literally 50 times more money in that venture capital investor model than they made as an operator.
Yeah.
50 times more. I mean, look at Shaquille O'Neal. Okay, he made hundreds of millions of dollars as a great basketball player. He's made literally, I think, close to $1 billion as an investor and as a venture capitalist. So that's a model that can be incredibly economically lucrative without taking the risk, and it is a natural transition.
As a wrap up here, what would you say is the call to action to business owners today?
Sell it, sell it. Okay, okay. It's like that scene from Pulp Fiction. Okay, all right. Ask yourself the great scene with Marsalis, with Bruce Willis, and I don't know what was the name of the actor, the other actor, when they're sitting there.
Uma Thurman?
Uh,
No.
Not Umar, but the mafia head. I can't remember his name.
All right.
But there's a great scene with Bruce Willis, and he's going to throw the fight. Okay, and he doesn't want to throw the fight. Okay, he's like, there's gonna be a sting. You're gonna feel it that you don't want to do it. You're not gonna want to go down. Okay, that's pride talking. That's pride talking. Okay, now he says something very, he says F pride. That's the advice to the business owner. Pride. Okay, if you want to go, listen. You want to take your pride to your grave. Just say what everybody's gonna price. How much is your pride worth? Is it worth $10 million? Ask yourself that question. That's how much you're paying for that pride.
Well, there's no better way to end a podcast than on that. So, thanks for joining, Jay. Always a pleasure. If
No,
you
Tim, thank you.
like, comment, share, tell a friend, reach out, email us, find us on LinkedIn. We're everywhere, and we're here to help you make it through these risks. Thanks, everyone.
Tim, thank you so much. Bye bye.